Input method, consider cost incurred in our number of hours resources spent on completing the PO which are contributing to the progress is equal to entity inputs to the satisfaction of the cost incurred till the date divided by total expected inputs and total estimated cost into 100. If significant costs are incurred without contributing to the progress, ignore such cost in calculation of the measure of progress. Recognize revenue to the extent of cost incurred. Exclude administration selling cost, including measure of the progress. When inputs are consumed evenly to satisfy the performance obligation to the entity, can apply straight line method for revenue recognition. Output method, measure measure of progress. Measure of progress is based on survey report or physical proportion basis or milestone reached. There will be a difference between the proportion of cost incurred and revenue recognized based on output method. Cost incurred but not recognized as expense is to be shown as a contract cost in balance sheet. Revenue recognition template, when performance obligation is satisfied over a period of time, can calculate transaction price after latest assessment only, variable consideration and modification. Total transaction price cost of significant items not contributing to progress, measure of the progress percentage. Add cost of significant item recognized as a revenue AC elevators. Total cumulative revenue to be recognized till the date A plus B, less revenue already recognized in earlier periods. Revenue to be recognized current period profit or loss account. Performance obligation completed at a point in time when uh, when when performance obligation is not satisfied over a period of time, it is treated as a satisfied at a point in time. Revenue recognized at a point in time when control over goods or services is transferred. In addition, an entity shall consider indicators, not conditions, of transfer of control. The following: the entity has the entity has a present right to payment for the asset. The customer has a legal title to the asset. The entity has transferred physical possession of the asset. The customer has the significant risk and rewards of ownership of the asset. The customer has accepted the asset. Contract cost. Incremental cost of obtaining a contract. The incremental cost of obtaining a contract are those costs that an entity incurs to obtain a contract with a customer that it would not have incurred if the contract had not been obtained. For example, a sales commission, stamp duty, legal fees, other contract execution. These costs should be recognized as an asset. If the entity expects to recover those costs and amortized on a systematic basis in proportion to the transfer of goods or services. Cost incurred, regardless whether the contract was obtained, shall be recognized as an expenses when incurred. Examples of traveling expenses, advertisement expenses, legal fees before contract execution. Cost to fulfill a contract. These costs are not part of any other Ind AS like Ind AS 16, Ind AS 38, Ind AS 2. If they are part of it, it will be dealt by the respective standard. Cost to fulfill include the cost relate to directly to a contract that the entity can specifically identify, the cost to generate or enhance resources, and the costs are expected to be recovered. Costs that relate directly to a contract include any of the following: direct labor, direct material, allocation of cost that relate directly to the contract, to a contract activities, costs that are explicitly chargeable to the customer under the contract, and other costs, other costs that are incurred, other costs that are incurred only because the entity entered into a contract. The contract profit and loss account, only the contract is greater than 12 months. An entity shall recognize the following cost expenses PRL account when when incurred: general and administrative cost, abnormal losses, cost that relate to already fully or partly satisfied, performance obligations in the contract, cost that relate to past performance, and cost for which an entity cannot distinguish whether the cost relate to unsatisfied performance obligations or to satisfied performance obligations. Cost for which an entity cannot distinguish whether the cost relate to unsatisfied performance obligations or to satisfied performance obligations. An entity, an entity shall recognize the following cost as expense PRL when incurred: general and administrative cost, abnormal losses, cost that relate to already fully or partly satisfied performance obligation in the contract, cost that relate to past performance, and cost for which an entity cannot distinguish whether the cost relate to unsatisfied performance obligation or satisfied performance obligation. Cost for which an entity cannot distinguish whether the cost relate to unsatisfied performance obligation or to satisfied performance obligation. A special cases in revenue recognition, warranties, service type warranty. Customer can buy this separately, treated as a separate PO since sold separately to the customer. Allocate transaction price to goods sold and warranty obligations using standalone selling price. Revenue on sale of goods recognized at a point of time. Revenue on warranty services, revenue on warranty services recognized over a period of time. And assurance warranty, in a separable from goods, customer cannot buy this separately. They provide a customer with assurance that related to product will function as a specified sale of goods, and warranty are treated as a single PO and recognize full revenue. Provision for estimated warranty obligation to be created as per Ind AS 37. They provide they provide a customer with assurance that the related product will function as a specified sale of goods, and warranty are treated as a single PO, recognize full revenue. Provision for estimated warranty obligation to be created as per Ind AS 37. They provide a customer with assurance that the related product will function as specified sale of goods and warranty are treated as a single PO and recognize full revenue. Provision for provision for estimated warranty obligation to be created as per Ind AS 37. Non-refundable upfront fees, non-refundable upfront fees, and some related cost. In some contract, an entity charge a customer a non-refundable upfront fee or near contract inception. Example: joining fee in health club contracts, activities fee, telecommunication contract, setup fees, in some services contract, initiation fee, some supply contracts.